One of the things that I'm always on the lookout for you and for me is for any kind of an arbitrage situation, any place that we as retailers can get an edge over the folks on the street. Now, this is pretty easy with Tesla in general, and I'm sure that maybe if you're heavily invested in Tesla, that's part of the reason why, or maybe it's the entire reason why. It's certainly the reason why I wrote the Elon Musk mission, was to get the facts on the table, because the facts were clearly being misrepresented all over the place, or misreported, or worse, fraudulently dealt with. So anyway, we're going to deal with some of that arbitrage today. This is Randy Kirk. If this is content that is useful to you, like and subscribe and notify. You'll definitely want to see the video tomorrow morning with Scott and I. It is going to be another mind-blowing thing about Optimus, and you just want to see it, okay? And so that's why you need to hit the notify. Plus, there's going to be some stuff next week. I'm going to be digging into each of the divisions and analyzing those in some detail. And I think you'll find that to be useful. Okay, let's talk about today's story. Oh, and join Patreon. Don't forget about Patreon. Oh, and buy the book. These are ways you can support me. You can support the channel. It costs money. It costs time. It costs a lot of energy, a lot of research in order to bring you this material. And so if you don't do this if you don't have some money sitting around that you can afford to, but if $5 a month wouldn't change your life, or $10 a month wouldn't change your life, then hit Patreon and support the channel. Okay, we're going to look at some serious potential arbitrage. I don't know for a fact that all of these things or any of these things are going to actually take place. But what I can tell you is if they do take place, there's a very, very good chance it's going to affect the price of Tesla stock coming up later this month when the earnings are reported. And why is that? Well, because the street doesn't believe what Zach Kirkhorn says. And the street doesn't pay attention to all the details like you and I do. And so let's take a look at some of the things that are going to affect margins and overall operating margins. Let's start with margins. This is going to be, let me just back up really quick. I did this in my video last night, but maybe you didn't see it. If you didn't, you should probably go take a look at the Good News Friday video that I did last night, where I talk about some of the details of last week's good news and also what I think the numbers are going to be on Sunday, tomorrow. And those numbers, in my opinion, are going to be around 135 on production and on shipments. Might be a little higher on production, but somewhere around there. That's what I'm suggesting, 130, 135. That's going to be a beat. And if that beat happens in a normal circumstance, the stock would go up, maybe another 10 points tomorrow or on Monday. But it probably in this market, it's probably not going to mean anything. If the market is up on Monday, Tesla will be up on Monday. So at least for now, that's what we can kind of expect. There's going to be a lot of good news this weekend on Tesla, and it's probably not going to affect the stock on Monday. But if the bonds are down and if the stocks are up, then Tesla will be up. Okay, let's talk about what things are going to affect margins. And these could affect margins in a really significant way. The big one is going to be that the reduced cost to manufacture in Austin and Berlin. So Model Ys are already cheaper to make than Model 3s, the same or less. I mean, I've heard plenty of reports from Tesla themselves that suggest that the Model Y is actually cheaper to make than the Model 3. And certainly if it wasn't cheaper before, it is now, because all the new methods have gone into Austin. The new gigacastings and the new way of managing the batteries and the new way of putting in the wiring and all the stuff that they've done down in Austin and over at Berlin, the new paint shop in Berlin, all these things have gone to lower costs. And so the Model Y at this point is probably significantly cheaper to make than a Model 3, and significantly less to make than it was a year ago in the overall picture. So the overall cost of the entire fleet being made on a monthly basis of Model Ys costs less than what the street is going to expect it to. All right. That is going to be a very big factor going forward. Within that factor is that raw material costs have been coming down. So all raw material costs have been coming down, but in particular, what's the number one cost in an electric car? The battery. Well, CATL has been in the negotiations with every single auto company. That's not me reporting. That's not a rumor. CATL put out a press release, put out a copy of their letter, whatever. I don't remember exactly the format it was in, but CATL said, we have been negotiating the pricing with all of our auto customers, negotiating the prices down on batteries. There was more reporting just on Friday that, on Friday that the Chinese, all the Chinese battery manufacturers got together and tried to put a floor on the price of lithium, trying to stop the precipitous fall over 50% from the highs. Lithium has gone down. They don't want it to keep going down. But the truth is CATL is running at about 60% capacity right now. And these other battery factories are so much smaller than CATL. It's hurting them more than it is CATL, but CATL wants to get their numbers back up. So they're having to lower their prices. Well, this is, of course, what Tony Seba has always said would happen. And let me talk to you once again. This is an important thing to think about. In every market, in every season, if it's a seasonal business, in every season of a economic set of curves into recession and a boom and bear and bull, there's always going to be booms and busts. And factories and wholesalers and importers and exporters are always trying to get ahead of the next curve, but they never do. They're always behind the next curve. So when things are booming along, factories are like, how can we get more out? How can we produce more? Wholesalers are calling and saying, I need more. And retailers are calling the wholesalers, I need more. How come you can't ship me more? I can sell all you can send me. So the factories are cranking it out. And then all of a sudden, maybe there's a little slowdown. It could be in one industry. It could be in one country. It could be in one region. It could be in a seasonal product. It could be all over the world, as it all happened with COVID. And so what you have is all of a sudden, in this particular case, you've had the boom in lithium, where everybody is scrambling to get as much lithium as they can possibly get. And all the factories of the mines that make lithium are trying to make it. The refiners are trying to refine it. And the factories that are doing the batteries are trying to buy up as much lithium as they can, get contracts far in advance, and then make batteries as fast as they can so they can fill the need. But unfortunately, other than Tesla, most of the other companies who manufacture cars haven't been able to move as fast on electric cars as they thought they could. The big exception has been BYD. But pretty much the rest of them were promising way more electric cars than they're making. As a result, there's not as many batteries needed. Well, this is good for Tesla because Tesla can use every battery that they can possibly buy because it can go into energy storage. We'll be talking about that a lot more in a video I'm going to do on Monday that's going to be talking about the amazing ramp that's coming on energy storage that is going to blow the minds of Wall Street. Okay, so with all that battery capacity available, Tesla has plenty of it for their cars. They've already said they had so much available that they could slow down the speed with which they were bringing on the 4680. They said this at Investor Day. So with that many batteries available, what do you think that's doing to the battery makers? Well, they're in a bust now, and so they got to lower their price. Those lower prices on lithium and the other metals that go into batteries, those lower prices on the overall battery, the lower prices on sheet metal and on stainless steel and on copper and on so many other commodities right now, all of those are going to drive down the costs of manufacturing a Model 3, a Model Y, X, whatever. So that means all the margins across the entire line are going to be getting a benefit from that. So that's not being figured in. I'm sorry, folks. The people on Wall Street are not taking into consideration all of these commodity drops. And some of them are maybe not all going to be in the cars in the first quarter. It might be the second quarter before we really begin to see the advantages of all these commodity drops into the battery price drop. Okay, so that's going to be big. Number 3. Well, Model Ys sell for a higher price and cost less. That's a good thing, right? And what car is Tesla making lots more of right now than they were last year? Well, they're making about the same number of S's, same number of X's, same number of 3s. Oh, they're making way more Model Ys. Okay, so they're making more Model Ys than they were last month. They're making more Model Ys than they were last quarter. It's the only car that they're making more of. So as they make, so they were only making 1.3 million cars total last year, of which a very small percentage of those were Model Ys. But this year, and when they make 2.2 million cars, over 1 million of those are going to be Model Ys. So half of their production this year is going to be Model Ys. Oh, what do you think that does to margins? Okay, it's going to have a huge impact on margins. So as the prices are coming down and people are saying, oh, the margins are shrinking, except the car that has the largest margins is the one, well, one of the largest margins is the one that's increasing in overall volume. So that's going to have a big impact. And the further the year goes out, the bigger that impact is going to be. I also expect Tesla to start raising prices again if they do fill up the pipeline. Now, they're making a lot more cars than they did last year. So given that, there's a possibility that at some point, it might be more even Steven in terms of the demand versus the supply. Tesla has a lot more demand levers that it can pull, a lot more marketing levers it can pull. It can still lower prices more. There's a lot of things they can do in order to make sure that they at least sell out. But if they're not 3 months out, if they're not 6 months out in orders, they may or may not raise many prices. But I do expect strategic price increases to continue. We've already seen those in January and February. I don't think we saw any in March, but you might see it in Australia. It might be in, it might be in the United States only or in France only. So you'll see strategic price adjustments, and those are all going to be going higher. I don't think you'll see many more, except possibly on the Model 3. You're not going to see many Model Y prices coming down. All right, number 4. A bunch of these cars are going to be made in Berlin. About 70,000 in the first quarter, 65,000 in the first quarter, 80,000 in the second quarter, 100,000 in the third quarter, 125,000 in the fourth quarter. These are all going to be made in Berlin, which last year were imported from Shanghai. So it's going to be more of them, and there's no freight from Shanghai. There's no import duties. There's no handling costs to bring them from Shanghai when you're making them in Berlin and distributing them within a very small region. So that's going to lower the costs of what's happening in Europe and in the other countries that are serviced by Europe. The big exception to that's going to be the UK. The right-hand drive cars are still all made in Shanghai, as far as I know, and so those will still be exported from Shanghai. All right, so that'll be a significant impact. You see the cost of the European cars coming down, but so did the cost of making them. So the price the consumers paying came down, but so is the cost to Tesla, as now they are all made in Germany. Number 5, well, the prices are coming down, and a lot of folks are not constrained by their paycheck, or they're not very constrained by their paycheck, and they have some room to move. So as the price has been coming down, and especially in the United States with the $7,500 IRA or $3,750 depending. So if the price comes down and you've also got this other benefit, what can you do as a consumer? Well, maybe you were planning on buying a standard range, so now you're going to buy a long range. Maybe you were planning on getting this particular, you were planning on getting the better paint. So in other words, a lot of stepping up. Maybe you were planning on getting a Model 3. Many people are saying that Model Ys are now cannibalizing Model 3s, and that's why Model 3s are under a little bit of pressure. So Model Ys, people are stepping up to Model Ys, and that is a higher price, meaning the average cost of sale is going up because people are moving up to a higher car, and the higher cost per car is also going to affect the overall numbers, and then the higher margins on that step up, because the things that they're stepping up to don't cost very much more. Maybe we'll see that there's a higher uptake on full self-driving, not sure. But this is leaving an opportunity for people to move up in terms of the car that they're going to buy. So overall, on the cost per car and on the margin, Zach Kirkhorn said that it was the auto margins would not fall below 20%. Now, he's guessing, he's estimating, he's telling us that, before the facts are all in, but that's what he believed would happen. I'm saying it's not going to get close to 20%. With all the stuff that I just reported to you, I'm going to suggest that the average margin is going to be at least 23 and might be as high as 25. And we could have a shock above 25. Believe me, if the margins come in at 23, 24, 25 or higher, the stock has almost no choice but to react to that. That's the kind of thing that I don't care what the market is, the overall market is, the stock has to react to something like that. Moreover, if the average cost per car, the average selling price comes in higher than, say, 40,000, which I think is where the street thinks it's going to come in. I've been estimating 44. Because a 20% drop last year average was 50,000, but now the street thinks it's going to be 40,000, 20% off, right? Oh yeah, except of all the things I just told you, people stepping up, way more Model Ys, all of that means that the average cost per car is going to be higher than anybody's expecting. I've got the number at 44,000. It could be higher than that. Might end up being 46, 47,000. That will also, if it's 43, if it's 44, 45, all of that will shock the street, because all of that is just going to drop to the bottom line in terms of profit. All right, let's go on. Now let's talk about the total operating margin. Zach Kirkhorn also said, don't pay that much attention to the car margins or the margins of the various divisions. If you really want to figure out Tesla, look at the overall operating margin, because we are we invented the concept of lean mean. When I had my factory, I was always trying to be as lean as I could possibly be. Most people don't understand why 3 shifts is so important. So many of my clients over the years are like, why do you do 3 shifts? I was doing 4 shifts if I could possibly do it. I wanted to be open 24/7. Why? I've got a cost of a building and everything that goes into that building. If I can divide that, or if I can multiply my sales by 4 times in that same space, holy mackerel, that's a big savings. Well, Tesla gets that kind of stuff. So the total operating margin, he says, look, watch that if you want to see what's happening. Tesla was approaching 20%. I think the highest maybe was a little over 18%. I didn't go back and check that for sure. But what if they came in at 18% on this particular time? What if in the first quarter earnings report, they come in at 18%? The street wouldn't know what to do with themselves if they came in at 18%. I'm not predicting 18%. I think it's going to be 15 to 16. I think that would shock the street. So I think any of those numbers, 15, 16, 17, 18, all of those will be shocking. How do we get there? Why do we get there? Well, number one, all those issues that I just brought up with regard to the margins on the autos themselves and of the total cost per car. Both of those things are going to impact this total the total operating margin. But what the street is definitely not planning for is the additional income, revenue stream, and or the profits out of Lathrop. And I don't know how much of this we'll get to see in the first quarter, but it should be at least significant. I'm going to suggest that it's going to come in $1 billion higher in profit than the street is expecting for just the first quarter. May not quite make that. Maybe it's only 700 million. Maybe I'll be completely wrong because of some of these bookkeeping things that they have to go through in terms of when they get to take the profit in terms of showing it in earnings. But I believe there will be $1 billion in earnings in the first quarter, even if it's not all able to be shown on the books. So $1 billion in earnings would have a big impact. It'll have a big impact on the overall operating margin, and it will have a big impact on the mentality of the street. And that number will be going to $2 billion in the second quarter. Mark my words. I've said it here. You can check me on it later, put it down, something to go back and find out whether Randy was right or wrong. So if it's $1 billion in the first quarter, going to $2 billion in the second quarter, and then Tesla starts announcing new mega factory locations, that will all be pretty big news and should move the stock. So the number two thing that's going to affect it, the increased sales of all the other small divisions. Insurance is going to be up. Supercharger energy is going to be up. Sales as a service is going to be up. Software as a service is going to be up. All these little tiny bits of this and that and the other are all going to be up. Even solar is probably going to be up. So all of that is going to be making minimum, little tiny contributions. Some of it, which may have been negative, like solar, might be getting closer to positive or going positive. So all of that's going to contribute to driving up the operating margin. And the closer it gets to 20%, the wilder and crazier the street should be reacting to it. All right, let's see. There will also be a big increase in sales without big increases in overhead, which results in larger operating margins. So yes, there'll be a huge increase in sales. Just the cars alone are increasing at a rate above 50%. Then you add in Lathrop, which is going to be, which is adding, I believe, something over $25 million a day to sales. All these little divisions are going to be adding revenues. So all those increases in sales, according to Zach Kirkhorn, they were going to be concentrating like a laser beam on keeping their overheads low. And I believe that because that's what they've done in the past. I think they will continue to do it. That it could only be, maybe it's only worth a 0.1%. Maybe it's like 0.2%. Maybe it's 0.5%. All of that matters when you start looking at the operating margin as the number one thing that you're judging the company by. And so that kind of wraps up my summary of where there's this amazing opportunity to be invested in Tesla at this time. I'm not a stock advisor. This is not stock advice, investment advice. Use it for your own purposes and do your own homework. But if I'm right, and the margins, first of all, this average sale comes in higher, the auto margins come in higher, Lathrop comes in with a big win, all the other divisions come in with minor increases, and the overall overhead stays very moderate or as a percentage goes down. These will all be big beats. And if they are, I think the stock will react regardless. No, I know, okay, we can't know anything. Even in this crazy market that we're in, where a lot of good news is not getting the results you'd expect in a stock, I think that news would have the impact we're hoping for. So like, subscribe, join Patreon, hit the notify button. Is there anything else you need to do here? Let me see. No, I think that's all. And so as usual, it's been great talking to you.